The Morgan Report with David Morgan.
David Morgan with you for the week ending April 14th, 2017. Well, right off, the bond yield falls to a 5-month low, and we're seeing weakness in yields in bonds, and this usually indicates it's bad for the stock market. Stock market was led lower by the financials, and small caps also had a tough time. The S&P closed below the 50-day moving average, and gold buying pushed up gold to a 5-month high. Well, we just took care of the first quarter of the year. We're a little bit into the second quarter, and I thought it'd be a good idea to go over how the metals particularly are performing so far this year. Year to date, aluminum is up about 10%, copper is up about 3%. Lead is up about 14% year to date. Nickel's off about 3%. Tin down about 6%. And zinc is flat. For the year so far in the precious metals, gold is up 12%. Palladium 17%. Platinum 8%. And silver, believe it or not, year to date is up 16.6%. As far as the gold indexes go, just the main ones, the XAU is up about 13.5%. And the HUI is up about 17%. So the metals indexes are just taking about the same amount of gain that the metals themselves have done. Crude oil roughly flat, off about 1%. Heating oil's off about 4%. Natural gas about 14%. And gasoline is up about 4%. Coming back to the stock market, the tech stocks experienced their longest losing streak in 5 years as panic begins to grip the market. Michael Snyder did this on the Economic Collapse blog, his blog site, and I'm not going to read the whole article, but it's important to note that tech stocks, of course, everyone believes in technology, or nearly everyone, and this is a good indicator, especially for the fact that it's fallen 9 days in a row. So stock market definitely looking toppy here. I've talked about the distribution pattern, the markup, and then comes the markdown. Is that going to be experienced in the near term or not? I wouldn't say absolutely, but I would say indications are that the stock market is not as robust as the numbers alone indicate, and the internals, again, as I've said many times, are not very strong. And coming back to a metal that I didn't mention in the year-to-date sequence was iron ore, steel, basically one of the most important ones out there as far as how the economy is going, just like copper. And this article from Zero Hedge talks about the Chinese steel futures have tumbled significantly, and we can see that here. Whether or not this is the beginning of a trend or not, I would actually indicate that it probably is. Again, certain commodities will do well, particularly the metals, and the overall economic conditions on a global basis are still contracting. And I don't think I can get through this weekend update or weekly update without going through something about the war. And this is a headline, obviously, from NBC News. Syria's Bashar Assad chemical weapons attack is 100% fabrication. I'm not going to comment much more on this. So much has been done. But what I would like to suggest for those that like to follow my perspective, to go to our Twitter feed and see what I posted on Saturday regarding the war effort so far and what's really going on. The perspective was done by Dave at X22 Report. So I highly recommend, if you'd like some, let's say, deeper look at what goes on behind the scenes, you might, again, take a look at our Twitter feed and listen to the X22 Report. Obviously, as tensions increase on a global basis and the Middle East is getting hotter by the minute almost, certainly I want to keep an eye on the oil situation. Here's an article on a site that I frequent on these weekly perspectives, and that is the oilprice.com website. This article has stated the risk of a major oil outage just grew substantially. I'm not going to read it to you. Again, I want to come back to the X22 report. You might get a slightly different look at it. And moving to gold, a couple things to report. One is China Shandong Gold in a $960 million, might call it $1 trillion deal for half of Barrick's Veladero mine. You can read the article. It's on Reuters, as you can see. Very interesting what's going on with Barrick. Those that are members of the Morgan Report know there's some more interesting things that you would see on Reuters, and we are watching Barrick very closely. On Pure Gold, what's very interesting here, and this one really should be read by everybody, is its CME Group and the UK's Royal Mint are testing a blockchain-based gold trading platform. The economic system, as we know it, or I should say the financial system, is broken. And anyone that follows my work and anyone like me knows that a lot is wrong with the way money works. In fact, until we change the way that money works, nothing's really going to change. So there's a lot of platforms, Bitcoin being the leader with this electronic platform, and the competition to banks, believe it or not, they're small now, but they're getting stronger. So now you even see it moving into the gold market. So right now, this technology is coming closer to deployment. What will it mean? From my perspective, when it's the CME and UK's Royal Mint doing it, probably not much. But there are efforts around a platform of blockchain that utilizes the precious metals that could have significant impact. So this is something that is coming to the fore and needs to be watched on a close basis. And moving to silver, I'm not going to say much other than silver's been lagging, although I read the year-to-date, and it's outperformed gold so far this year. To be expected in a bull market, silver does outperform gold. And, of course, in a bear market, it underperforms gold. Right now, I just want to talk a little bit about ETI, this recommendation that we had in the Morgan Report that is now up and trading. And this is Brazil suspends the Belo Sun's gold mine license and the stock collapses. Why? Cyanide. And those that have followed our work closely at the Morgan Report know that ETI has a reagent that is a competitor to cyanide. Actually, it performs better than cyanide, and it's basically inert. So it's a big, big thing that very, very few know about. And let me rephrase that. It could be a big, big thing. I believe that it will over time. It's new. Very few know about it. Those that follow our work are familiar with the company and the prospects. But nonetheless, this is an interesting article that I chose to show everybody because you're probably going to see more and more of this where we have situations where the population near the mine just basically doesn't want to see any cyanide taking place. And there is a solution. Again, not many know about it. This is a press release that went out that we sent out some while back. The Gold Game Changer, Say Goodbye to Cyanide. It's on WebWire. You can look it up. Just type in Gold Game Changer. It'll probably bring up the article here. Very brief. Talked about what we did going up to see the chemistry in Vancouver and tested it, verified it for ourselves. And this is something, again, that longer term could be significant not only in the mining industry, but in particular in the e-waste sector, meaning the electronic waste, which is a huge sector. And most people are not really aware of how much comes out of the electronic industry annually on a recycling basis. So that'll conclude a rather long weekly perspective. I'll be back with you next week.